Let's get into what really mattered in the Forex market today, April 15, 2025. No nonsense, just a straight breakdown of what moved the majors and why. If you were trading intraday, you already know it was a day packed with US data and some key reaction moves across the board. Big story, hotter than expected US CPI. Today's headline was all about US inflation. The March CPI report came in above expectations, again. Headline CPI year-over-year, 3.6% versus 3.4% expected. Core CPI year-over-year, 3.9% versus 3.7% expected. M/M core, 0.4%, that's the third straight monthly print at or above this level. What's the takeaway? The Fed's not cutting in June. That dream is dead for now. After the data hit, rate futures flipped hard. Fed fund futures are now pricing in just one cut for 2025, with most of the probability leaning towards September at the earliest. This CPI report was sticky in all the wrong places. Housing, services, and especially transportation and medical care were persistent. Powell's recent commentary about needing a greater confidence in disinflation. Well, this report gives him zero of that. USD reaction, dollar got its groove back. After that CPI drop, the US dollar snapped back across the board. Euro to US dollar fell from around 1.0690 down to 1.0620 intraday. Pound sterling to US dollar dropped from 1.2550 to sub 1.2480 before catching a minor bounce. US dollar to Japanese yen ripped higher, breaking above 153.00 with force, tagging 153.80 before pulling back slightly. This was classic dollar strength off hawkish repricing. Yields surged, 10-year Treasury jumped over 4.5%, and the 2-year moved above 4.9%. That pushed DXY up nearly 0.6% on the day. Intraday sentiment and volatility. The market was leaning dovish going into this data. You could feel it in the bid for risk pre-release. But once that CPI hit, volatility exploded. Euro to US dollar had a 70 pip spike to the downside within the first 30 minutes. Dollar index, DXY, saw its biggest intraday pop since early March. Equities tanked on the open, Nasdaq futures were down over 1.5% at one point. Traders rotated quickly out of risk and into dollar safe havens. You also saw a fade the pop move later in the session, classic aftershock behavior as algo-driven spikes settle. Trader takeaways. What actually moved the market? Let's break it down like we would in a trading desk chat. This wasn't just CPI beat by the dollar. It was sticky core inflation plus longer Fed hold plus markets mispriced for cuts. The USD wasn't priced for this kind of number. That's why we saw such a strong move. Euro to US dollar weakness is more than just USD strength. Germany's ZEW sentiment missed this morning, and ECB rate cut chatter is heating up for June. That divergence theme, Fed on hold versus ECB ready to cut, was front and center today. US dollar to Japanese yen is getting dangerous. The BOJ's not doing anything in the short term, and the US-Japan rate spread is ballooning again. Traders are starting to whisper about MOF intervention if this climbs toward 155. Keep an eye there. The wrap-up, where we stand tonight. Euro to US dollar, hovering around 1.0620, technical support still holding for now, but looks heavy. Pound sterling to US dollar, back near 1.2480, pound's resilience is tied to UK CPI due Wednesday. US dollar to Japanese yen, trading at 153.50, intervention watch is on. DXY, closed near 105.20, this is a breakout level if confirmed tomorrow. What to watch next? UK CPI tomorrow, Wednesday, the pound will move hard on this. Hot print equals GBP bid. Fed speak all week. Williams, Barkin, and Bostic are up next. If they lean hawkish, expect more dollar strength. Geopolitical premium. Iran-Israel tensions are still under the surface. Gold spiked early today before fading. If anything flares up, that'll spike US dollar to Japanese yen volatility and risk-off trades. Final thoughts from the desk. Today was a reminder that inflation isn't dead and the market's been too dovish for too long. These are the kind of trading days where macro fundamentals snap back into focus. The dollar found its footing again, and now it's all about follow-through into midweek. If you're trading tomorrow, be nimble. Watch the bond market first. Yields will lead FX from here. Stay sharp out there. Alright folks, that's the wrap. Hit the charts tonight and prep for London Open. Tomorrow's gonna be busy. Let's keep the risk tight and the plays smart. Catch you in the next session.